Hello, this is Paul Mampilly for the Profits Unlimited YouTube channel, and I'm making this video to tell you about my latest article on Winning Investor Daily. Winning Investor Daily is the free e-letter from my publisher Banyan Hill. Go to banyanhill.com to sign up to receive it. My articles come out every Thursday. In this week's article, I'm writing about interest rates, and in particular writing about the interest rates that are rising on government bonds. And the reason why I'm bringing this up is because in the article, I cite the fact that the government bonds, in particular the 10-year U.S. government bond, is used as a standard, a benchmark to set the prices for many assets around the world. And that's true for corporate bonds that are issued by companies. That's true for many dividend-paying stocks, especially low and slow growth dividend-paying stocks. And to some extent, the interest rates that you can get from government bonds also sets the demand for what I would call safe haven assets like gold, and what I also consider a safe haven asset is Bitcoin and many of these cryptocurrencies. Now, if you go to the article, you'll see that the interest rate on the US 10-year bond is now in excess of 3%. And relative to what you could get for owning the 10-year US bond even last year or 2 years or 3 years ago, or certainly 5 or 10 years ago, it's substantially higher. And that, I believe, is going to change the demand for all of these kinds of assets. The demand for corporate bonds issued by companies, these low and no growth dividend paying stocks, like for example of food companies. And I also believe it's going to change the demand for safe haven assets like gold and collectibles like diamonds, and also Bitcoin and these cryptocurrencies, because I believe that the demand for safe haven assets was driven significantly by the financial crisis that happened in 2008, which led to a great distrust in the government, great distrust in the financial system, and really spiked the demand for what is considered a non-financial asset in terms of gold, where people really wanted to own something that they felt would be okay even if there was a Great Depression that was going to come and result from the financial crisis of 2008. In terms of corporate bonds and bonds issued by companies, the demand for these bonds is going to go down because today, by taking less risk, meaning that if you own the US Treasury bond, as I write in the article, there's less risk in that because the US government issues that. The US government is a organization that has the ability to print money, it can tax, and so there's no real concern in terms of default, and also you're sure that you're going to get your interest payments. With a company, there's always the risk of bankruptcy, and so the risk is higher. And now with the ability to get higher rates from US government bonds, there are fewer people that are going to want corporate bonds, and more people are going to buy US government bonds instead. So that's going to lower the demand, and the price of those bonds are going to go down. And the same is true for these low growth, no growth dividend paying stocks of food companies like Kellogg and companies like that, where people have piled in to get a slightly higher yield by owning them. And now with the fact that you can get a safe interest rate by owning government bond, fewer people are going to want that, and the price of these are going to go down. So in the article, I say that these investments should be sold because I believe that interest rates are going to continue to go up steadily, and with that, the demand for all of these investments and assets will go down, and their price will go down as well. Please support this channel by giving this video a thumbs up. Please subscribe to this channel and share it with your friends and family. For the Profits Unlimited YouTube channel, this is Paul Mampilly.